Gleanings. I am Chris. He is Jesse. Jesse, it's August 13th, my dad's 79th birthday.
How about it?
Shout out, Dad.
Happy birthday, Carl.
Yeah. Let's start with kind of the news of the last week, which has been the volatility index spiked pretty hard. You know, you've got the great financial crisis, you've got COVID, and then you've got last week, which doesn't really feel quite the same.
Yeah, and first of all, VIX is probably not what people are mostly paying attention to, but it had a consequence on their portfolio, and that stocks went down that day. Volatility index, yes, on Monday hit a third all-time high.
Yeah, mostly because of Japan and the notion of them raising rates a 0.25%. Yes, right, the yen carry trade.
That's right.
Which we won't spend a bunch of time trying to explain.
I think it's that, maybe the soft jobs report and the triggering of the SOM rule, but I've even heard Claudia Sahm even explain probably not what we're looking at right here.
Yeah, so the SOM rule is when unemployment starts to rise to the level that it has gone up, which isn't massive,
right,
then ultimately that's gonna trigger a recession, or at least that's the notion of the rule. But just like the yield curve being inverted, which by the way, still inverted since October of 22 until now, ultimately, you know, that thing had a 1,000 batting average, just like the SOM rule has, and you know, we'll see.
Yeah, again, a recession will come, folks, at some point.
Yeah, that's right.
I don't think it's around the corner, and I think there's plenty more reasons to believe that it's not around the corner than it is to believe that there's something, imminent to happen. But all that's to say is kind of the culmination of this, Japanese kind of weird hedge fundy type thing, right?
Or the concern of the hedge fundy,
right? That's right. Again, I've heard someone say, look, if you're not, doing the carry trade yourself in the yen, it's not something you need to worry about. Right. So
that's right.
So anyway.
So looking at this next chart, so this is the drawdown of the markets during this last little bit in August. So the S&P was down 8.5, small caps were down 9, and mid caps were down 8. So everything was in that 8 to 9 range. I mean, now the interesting thing, again, that sounds like, well, maybe it's the start of something. So here's the next chart. This is from JP Morgan. This is looking at the last 44 years of information. The gray bars are calendar year returns. And you can see at the top, 33 out of 44 years positive. That's a 750 batting average to the upside, which is obviously good. But what's also interesting, the little purple dots underneath, those are intra-year pullbacks, right? Some point during the year, so for example, one of my favorites is to look at 2011. The market was flat as a pancake on the year, but in August of 2011, stocks went down a lot. And the reason it went down in that case was because the Tea Party and the debt ceiling debate. But the point is that garden variety pullbacks happen even in bull markets, and you can see back in the 80s. If you look at the string in the 80s and 90s of mid to high single digits pullbacks sometime intra-year, it's pretty normal.
A lot of negative 8s with a plus 20 on the year. So, nothing out of the norm to see that at some point between January and December, a market hit an all-time high or a high for the year and pulled back some and either got back to where it was and beyond, or at least stayed positive for the year. So nothing unusual to sniff at there.
Right. The third quarter does tend to have a reputation for bringing some of the wall of worries type items out. This is from FundStrat, August, October, things to potentially worry about. Risk of the Middle East, Iran and Israel, Russia, Ukraine. There's that Japan carry trade unwind, seasonally tough period. The Fed cutting starting in September really isn't something necessarily to worry about. We talked last time about how since 1984 there have been more positive outcomes when the Fed cuts than negative outcomes.
Yeah, I think I almost wonder if what they're saying here is, have they waited too long? I think that was part of that Monday disruption as well, was there was enough people spouting off about Fed's already waited too long. Well, it's pretty much baked into the cards at this point that it's going to be a September cut, and so I think that's already kind of expected in the markets as well. So I'm not sure that that's something tremendous to be worried about, as you state. So. And,
economically, gross domestic product was up 2.8% for Q2. I mean,
Hard to
that's
get too
growth.
negative. Yeah, it's hard to get negative about that. That's right.
That's exactly right.
So going to the next chart, something that, looking at this chart, I recognize is that I think at the end of June for an election year, 2024 was on pace to be the very best year ever.
Right.
And so seeing a bit of a cooling down from that is not unusual. Obviously, markets go up and down throughout the year, and we've seen it, and it's fallen down to still upper decile for sure of an election year, and so still positive. And even if it were to finish, flat from here, would be a good year
for sure.
in the terms of things. But typically, what we see now, moving to the following chart, is this period from from August till the election tends to be slightly positive, right? Some bumps along the way, and then to close out the year after the election,
usually
typically in an election year is pretty good. And I think a lot of that is credit due to whoever gets elected. Now we know.
Yeah,
right?
That's right.
So uncertainty is removed.
And you can see that's every election year from 1950 to 2020 down below the blue line. And therefore, that would be, I haven't added up how many elections it is, but it's double digits. And you can see November and December tend to be a little bit more positive afterward. One of the points our friends at All Star Charts make here to the upper left, trend is more important than level. Well, what I see on this chart is a series really of higher lows there, and that's generally more positive. I mean, it's not breaking down to the downside.
Right.
And that's good.
Yep.
So, and that's what they mean.
Yep.
So, now, and this is not to pick on our friend Liz Young, but it is to say, you can look at information two different ways. The point Liz made this morning, as a producer price index came out, that's mostly wholesale. That would be what a business can buy the products for wholesale to then turn around and sell.
Ultimately, a retail price.
Yeah, that's right. That's right. Month-over-month print was the second lowest on record. This attempts to measure wholesale and retail margins, suggesting a meaningful decline in profits. More of this would not bode well for earnings in coming quarters. So here's the thing in the period we really kind of find ourselves in. There are two ways to look at this. One is Goldilocks, which is obviously not too hot, not too cold, just right. Okay, falling inflation, good earnings and productivity, modest to good.
Going up in a measured manner.
That's Goldilocks, right? Deflation is the floor starts falling out from under you, okay? And yeah, that would be a concern. Now, interestingly, our friends at Cinnamon Trader put together a chart on PPI 12-month change. If it's above 9%, that would imply that inflation is skyrocketing.
Yep.
If it was below negative 12%, that would imply things are
very bad
plummeting.
Deflation. Yep.
That's exactly right. But ultimately, when you look at kind of the period in between, things have been fine. You do have
at the extremes. You absolutely want to avoid risk at that point. But within a pretty wide range of PPI numbers. Again, it's not without bumps in the road, but you want to be in risk assets at that point.
That's right. That's exactly right. So this period of time doesn't scream, "Hey, get out of the way." Right. At this moment. So, and the other thing is this, I mean, we talked about the VIX, but we didn't say this. The reality is there are points in time when if you look at forward returns off of elevated VIX, they actually look pretty good.
That's you absolutely should be buying in those opportunities. That's right.
Yes. Yeah. And I know we put a little bit of cash to work at that point. Now, I will say this, or at least for IRA portfolios, the challenge is that you don't know.
That's right, of course.
So you don't know whether it's going to be right to buy at that moment or if you're going to get pummeled further. So you can't just shove it on the table and say, put it all on red. I mean, you got to be measured in what you're doing. But, it's more a moment to buy usually than sell. So next chart.
Yeah. So FundStrat had said earlier in one of their list of walls of worry to climb is this period from August to October tends to be a little more volatile, have some difficulties, and this spells that out in that what they're saying here is August actually is the most common month of all months for a bottom for the year.
Since 1928. Now, it doesn't mean that there haven't been other months like September or October where there's a bottom. In fact, in October, 38 bottoms versus 42 bottoms. But on a percentage basis, August statistically still has been higher. And in election years, yet again, August has been the highest percentage.
So, the implication that they're making is maybe we've already seen the low for this period, and that would be a positive as well.
And thinking in terms of that J.P. Morgan chart, it wouldn't look that unusual. Different from a mid-'80s type lowering inflation type bull market kind of year.
Yep.
So finally, looking at the New York Fed's 1-year inflation rate expectations right at 3%, which is essentially pre-pandemic.
Yeah, I think that's funny, in part because we were accustomed to lower than 3% inflation for a long period of time, actual inflation, but very often the 1 year out prediction was that we were going to be at 3%.
Right.
And here we are, and we're back at that level again. So nothing that seems too negative about that by any means.
Consumer Price Index comes out tomorrow. We've had 3 prints that have been lower. The last 3 months, we've had lower than expected CPI. We'll see if that happens again. That would imply that inflation continues to fall and would be a good thing.
Yep, absolutely. Absolutely.
So what'd you think of the Paris Olympics?
Oh, man. Simone Biles is amazing, obviously.
Did you see the guys from Penn State trying to redo her routine, the Penn State gymnasts?
No.
Oh, it's hilarious. They were trying to do stuff she was doing, and they weren't. They're on a Division I Big Ten, so in the Northeast.
Yeah.
Gymnastics team.
Yeah.
You would think, okay, well, they're going to be in the realm of, dude, they could not.
Oh, she is otherworldly. There's no question about it. So, credit to her. And, to come back from the 2021, I guess, Olympics after she had that, twisties, I think is what they called it.
Yeah. Pretty impressive.
Just very, very impressive. Always cool to see someone at that level and just be able to appreciate it.
I was completely enthralled with the venues. To watch 3-day eventing at Versailles
and
dressage
and stuff like that was kind of over that way. That was awesome.
I saw a tweet. Somebody said their mom said that that she was really enjoying watching Snoop Dogg, and he's like, "Mom, I'll remind you that you grounded me for buying one of his albums."
I'm sure that's the case. That's funny how far he's come. So, but no, other than that, we just got back from a brief vacation up to the Midwest on the lake. It was awesome. Just an opportunity to enjoy life, and that's what it's all about. So, how about anything else for you?
If back to school is your idea of enjoying life, then yes. I will say it's nice to get back on routine.
Yeah,
it's try to get up and do things early, get the child to bed at a reasonable hour, all that kind of stuff.
That's right. Yeah. Well, friends, thank you so much for watching. Hit subscribe, share it with a friend, hit the bell even if you want to be notified when the next episode comes out. We've shared before. We've got an exciting new kind of video project coming out before too long, and we'll look forward to sharing that with you all in the next month or so. But until then, stay tuned to Random Gleanings, and we'll see you next time. Thanks.